Hello, my name is Alan Thomas from Dayton, New Jersey. Thank you for joining me today on this section of Policy Riders. Riders add extra value to the policy and cost more. Riders can personalize a policy by adding additional coverages based on the policy owner's needs. I like to use the example of buying a large cheese pizza, which may cost you $10. However, when you start adding on the additional toppings like sausage, pepperoni, and whatever you might like, now that $10 pizza is costing you $18. You can consider those toppings as riders. There are 4 types of riders. Riders affecting the death benefit, riders covering additional insureds, riders that cover disability, and riders that pays living benefits. Today we're going to talk about riders affecting the death benefit, and they are accidental death and dismemberment, guaranteed insurability, cost of living, and return of premium riders. Riders affecting the death benefit are accidental death rider. This is added to the policy in case of a death resulting from an accident as defined in the policy. It is often referred to as the double indemnity because the death benefit is often double the face amount, but may also be other amounts as stated in the policy contract. Riders affecting the death benefit also can include accidental death and dismemberment. This pays for benefits due to death caused by the accident. In addition, it can also pay for the loss of one or more hands, arms, legs, and eyes. An example of an accidental death rider is that we have a standard $100,000 policy coverage. If the death is caused by the accident, as defined by the policy, the payout would be $200,000 or double indemnity benefit payable to the beneficiary. The next rider we have is a guaranteed insurability rider. This is a very useful rider in the event that an insured, when they're younger, buys a policy, let's say for $100,000, but also may want additional coverage in the future when they get married or add children to the policy. What's great about this rider is that the insured does not have to show proof or evidence of insurability, meaning they will not have to go and take a medical exam to obtain this coverage. The specific dates that may occur when this rider is added can be when the insured gets married, have children, or at specific years like 5, 10, or 15 years. Again, you do not have to prove evidence of insurability. The cost of living rider is the next rider we're going to discuss. It increases the benefits due to changes in the cost of living. It's tied to what they call the CPI or the Consumer Price Index, usually with a maximum amount of coverage of 5%. An example, we have a $100,000 policy. If you apply the 5% cost of living percentage to that, your policy will now be increased to $105,000. Again, no proof of insurability is required. However, the coverage is based on your attained age. So the next rider we're going to discuss is return of premium rider. This rider provides for the return of all premiums paid if the insured dies within a specified period of time. The policy will pay the face amount plus the amount of premiums paid. So today, in summary, we covered riders affecting the death benefit. They are accidental death and/or accidental death and dismemberment, guaranteed insurability riders, cost of living, and return of premium riders. Remember, accidental death pays out double the face amount. Accidental death and dismemberment pays out death in addition to loss of limbs. Guaranteed insurability rider, you can add additional coverages during specific times of the policy without evidence of insurability. Very, very important part. We have the cost of living, which is based on the cost or hedge against inflation and using a maximum allowance of 5% to the policy coverage, and the return of premium rider, which pays for the face amount in addition to any premiums if the insured dies at a specific period during the policy coverage.